Hi, this is the seventh complete comprehensive example. In this example sum, we will be dealing with hidden goodwill. So this is an example sum demonstrating hidden goodwill. Let's go to the example sum. Example sum. Deepika and Rajshri are partners in a firm sharing profits in the ratio of 3:2. On 31st March 2019, their balance sheet was. The balance sheet is given to the left of the screen. Additional information to the right of the screen. On 1st April 2019, the partners admit Anshu as a partner on the following terms. First point, the new profit sharing ratio of Deepika, Rajshri and Anshu will be 5:3:2. Second point, Anshu shall bring in rupees 32,000 as his capital. Third point, Anshu is unable to bring in his share of goodwill. Partners therefore decide to calculate the goodwill on the basis of Anshu's share in the profits and the capital contribution made by her to the firm. Next point, plant and machinery is to be valued at rupees 60,000, stock at rupees 40,000, and the provision for doubtful debts is to be maintained at rupees 4,000. Value of land and building has appreciated by 20%. Furniture has been depreciated by 10%. Last point, there is an additional liability of rupees 8,000 being outstanding salary payable to employees of the firm. This liability is not included in the outstanding liabilities stated in the above balance sheet. Partners decide to show this liability in the books of accounts of the reconstituted firm. We are asked to prepare the revaluation account, partners' capital accounts and the balance sheet of Deepika, Rajshri and Anshu. Now, the point C over here, it says Anshu is unable to bring in his share of goodwill. Partners therefore decide to calculate the goodwill of the firm on the basis of Anshu's share in profits and the capital contribution made by him to the firm. So this will tell us that goodwill has to be calculated based on the incoming partner Anshu's share of profits and Anshu's capital contribution. So this means that this problem has hidden goodwill in it. So we'll begin by preparing the revaluation account. We'll prepare the partners' capital accounts, and while doing so, we'll calculate the value of hidden goodwill and treat the goodwill of Anshu also, and then finally prepare the balance sheet of the new firm. Solution. Revaluation account. Left side debit side and right side credit side. Particulars. Rupees. Particulars. Rupees. Let's go to the additional information. Point A is about the NPSR. Point B is about the capital brought in by the incoming partner. The point C is about the hidden goodwill. Let's go to point D. It says the plant and machinery is to be valued at rupees 60,000. The book value is 48,000. There's an increase of 12,000 in plant and machinery. So it's by plant and machinery account. ₹12,000. stock is to be valued at 40,000 rupees. The book value of stock is 32,000 rupees. So there's an increase in stock value by 8,000 rupees. By stock account, 8,000 rupees. The provision for doubtful debts is to be maintained at rupees 4,000. The provision is currently 800 rupees. We need to increase by 3,200 rupees. 2. Provision for doubtful debts, 3,200 rupees. Value of land has been appreciated by 20%. So buy land and building. %20 of 50,000, 10,000 rupees. Furniture has been depreciated by 10%. To furniture account, 10% of 10,000 rupees is 1,000 rupees. Point E, there is an additional liability of rupees 8,000 being outstanding salary payable to the employees of the firm. This liability is not included in the outstanding liabilities stated in the balance sheet, and the partners decide to show this liability in the books of accounts of the reconstituted firm. So we are bringing an unrecorded liability into existence to outstanding salary account, 8,000 rupees. Let's balance the revaluation account. The total of the credit side, 30,000 rupees. The total of the debit side, 12,200 rupees. The greater total on both sides, 30,000 rupees. There's a gain on revaluation of 17,800 rupees. To gain on revaluation, transferred to partners capital accounts. Deepika and Rajshri. The total gain, 17,800 rupees. We need to divide this in the OPSR, which is 3:2. $10,680 against Deepika and 7,120 against Rajshri. So this is a revaluation account which has been prepared by us. Next, let's go to the partners' capital accounts. Partners capital accounts. Left side debit side and right side credit side. Particulars. Deepika, Rajshri, Anshu, On the credit side, again, particulars. Column for Deepika. Column for Rajshri. And column for Anshu. We'll begin by bringing down the balance of capital accounts for Rajshri and Deepika by balance brought down. 48,000 against Deepika and 40,000 against Rajshri. Next, we'll deal with the capital which is brought in by Anshu by bank account. $32,000 is capital brought in by Anshu. We'll transfer the gain on revaluation by revaluation account. We'll refer to the revaluation account to find out the gain. It's 10,680 and 7,120. There are no adjustments for reserves, accumulated profits, or accumulated losses, or any fictitious assets. We need to treat the goodwill. So to find out the hidden goodwill, we will do the working notes. Working note 1, calculation of hidden goodwill. The first step, net worth of the firm based on Anshu's capital. It's equal to the capital which is brought in by Anshu, which is 32,000 rupees, multiplied by the reciprocal of his share, which is 10 divided by 2. And this comes up to rupees 1,60,000. The second step is actual net worth of the firm. We'll begin by taking capital of Deepika 48,000 rupees plus the capital of Rajshri 40,000 rupees plus the capital of the incoming partner 32,000 rupees, and also we need to add the gain on revaluation, which is 17,800 rupees, the gain which we arrived at in the revaluation account. There is no reserves or accumulated profits or losses or fictitious assets or even existing goodwill or non-trade investments. So this is the final answer to the actual net worth of the firm. Comes up to 1,37,800 rupees. Third step, goodwill of firm is equal to the answer of step 1, which is 1,60,000 rupees, minus the answer of step 2, 1,37,800 rupees. This gives us rupees 20,000. 2,200 rupees is the goodwill of the firm. Next, Anshu's share of goodwill. The goodwill of the firm, which is rupees 22,200 multiplied by Anshu's share in profits, which is 2 divided by 10. So we get rupees 4440 as Anshu's share in goodwill. Let's go to the second working note. Working note 2. Calculation of gain or sacrifice of each partner. OPSR between Deepika and Rajshri is given as 3:2, and the new profit sharing ratio between Deepika, Rajshri and Anshu is given as 5:3:2. For Deepika, old share 3 divided by 5 minus the new share 5 divided by 10, we have a positive 1 divided by 10. So Deepika has sacrificed. For Rajshri, old share 2 divided by 5 minus the new share 3 divided by 10. Again a positive 1 divided by 10. Rajshri has also sacrificed. Therefore, the sacrificing ratio between Deepika and Rajshri is equal to 1 by 10 is to 1 by 10, or in other words 1:1. Final working note 3. Journal entry for goodwill. Now Anshu is unable to bring in his share of goodwill, so we'll do the journal through Anshu's current account. So Anshu's current account debit to Deepika's capital account to Rajshri's capital account. The sacrificing ratio is 1:1, and Anshu's share of goodwill is rupees 4,440 rupees. So 4,440 rupees in 1:1. So it's 2,220 against Deepika and rupees 2,220 against Rajshri. If complete the working notes for hidden goodwill, let's enter this in the partners' capital accounts. By Anshu's current account, 2,220 for Deepika and 2,220 for Rajshri. All the entries are done. We'll balance the partners' capital accounts. to balance carried down. Total of Deepika 60,900 and the balance carried down is also 60,900 rupees. For Rajshri, total is 49,340 rupees. Balance carried down also is 49,340 rupees. And in the case of Anshu, the total is 32,000 rupees. And balance carried down is also 32,000 rupees. So this is a capital accounts which is prepared by us. Next, let's prepare the balance sheet. Balance sheet as at 1st April 2019. Left side, liability side, rupees. Right side is the asset side. We'll begin with the liability side items. Sundry creditors, first item. There is no change in the value, 16,000 rupees. Public deposits. No change, 61,000 rupees. Bank overdraft. No change, 6,000 rupees. Outstanding liabilities. No change, 2,000 rupees. Now as per point E, the additional information, there is an outstanding salary payable to employees of rupees 8,000. So let's insert that. Outstanding salary 8,000 rupees. Finally, we'll insert the capital accounts of the partners. So we have Deepika, Rajshri and Anshu. We'll refer to the partners' capital accounts to get the capital balances. 60,900, 49,340 and 32,000. 49,340 and 32,000 rupees. Totals to 1,42,240 rupees. We'll insert the asset side items. Cash in hand. There is no change. 1,200 rupees. Cash at bank. Opening balance is 2,800 rupees. We'll add the capital which is brought in by Anshu, which is 32,000 rupees. Anshu does not bring in any goodwill. So the final figure 34,800 rupees. Stock. It says stock is to be valued at rupees 40,000. prepaid insurance, no change in value, 1000 rupees. Sundry debtors, original figure 28,800 less provision for doubtful debts. We had increased the provision to 4,000 rupees. So in the outer column we get 24,800 rupees as the amount of sundry debtors. Plant and machinery, it's valued at 60,000 rupees. Land and building, we increased the value by 20% or 10,000 rupees. So now it's 60,000 rupees. Furniture was depreciated by 10% or rupees 1,000. So now that's 9,000 rupees. And for treating Anshu's share of goodwill, we opened a current account. So Anshu's current account, 4,440 rupees. So all the items in the balance sheet are done. I'll remove the split and we'll see if the balance sheet tallies. So this is a balance sheet which is prepared by us. Total of the liability side, 2,35,240 rupees. Two lakh 35,240 rupees on the asset side. Also both sides tally. A small note here in the liability side of the balance sheet, we have a bank overdraft of rupees 6,000. We can prepare the balance sheet by setting off the bank overdraft against the cash and bank balance, 34,800. Now in this case, the bank overdraft balance will not appear on the liability side of the balance sheet, and the cash and bank balance, which will appear on the asset side, will be after setting off the bank overdraft, which is 34,800 rupees minus 6,000 rupees, which will come to 28,800 rupees. So in this case, the balance sheet total will reduce by rupees 6,000. So you will get the balance sheet total as 2,29,240 rupees. So let's see all the accounts together. So this is the revaluation account prepared by us. We got a gain of 17,800 rupees, which we distributed among the old partners in OPSR, which is 3:2. Next, we prepared the partners' capital accounts, and we had to find out hidden goodwill also, which we did it in the working notes. This is the balance sheet which is prepared by us. Both sides tally with 2,35,240 rupees. And in case we choose to set off the bank overdraft 6,000 rupees against the balance of bank available, the balance sheet will total to rupees 2,29,240 rupees. So these are the working notes. The first working note was for calculation of hidden goodwill. The second working note was to calculate the gain and sacrifice of each partner. And the third working note was the journal entry for goodwill, which we passed through Anshu's current account because Anshu did not bring in his share of goodwill.